Well, let's bring in right now Landsberg Bennett, Private Wealth Management CIO Michael Landsberg. And Michael, I want to follow up with this, the talk about earnings as we're kind of winding down Q4 reporting. You say you believe in earnings growth, but do you think that trend really continues for the rest of 2025, or do you think that there might start to be some kind of cracks in the armor for Q1?
Sure. I think earnings growth is what we always seem to go by. A lot of noise around tariffs and this and that. End of the day, stocks trade on really what their earnings are going to do. And you're seeing double-digit growth in the S&P, double-digit growth again over 20% in NASDAQ. And actually, finally, the Russell 2000s finally showed up to the party, and they've actually even got earnings growth. So I think the earnings growth story is here. It's intact. And I think it should continue. There's a possibility that you have a hiccup here and there, but realistically, this is the strongest story. This is a fundamental story of corporate America doing the right thing and making money.
Yeah, but also having to kind of weed through an uncertain economic and political environment, which is what Mark and I were just talking about, to be clear. Do you have any insight into how we're supposed to kind of navigate this from an investor perspective?
Yeah, I think the nice thing is we already had 4 years of Trump. So I think a lot of stuff, I even just saw the Fed trying to use the statement of they're unsure about tariffs. We had 4 years of Trump before. Inflation was on average 2.5% for the 4 years. So to blame him for the possibility of inflation coming on later because of tariffs, I think is basically a way for them to try to scapegoat something. We had inflation in our models going from 2.4 in September to 3.5 a year later, irrespective of who was going to be president. So I looked at inflation as inflation is going to be here. You need to be investing to take advantage of that. And the tariffs may or may not be here, but realistically, inflation is here to stay.
Well, and really quick, I just want to, you jumped ahead of, we didn't let our viewers know that the FOMC minutes, by the way, did come out a little over 6.5 minutes ago, 2 p.m. Eastern time. I just want to kind of reiterate word for word what the Fed did say that you just referenced. And that's basically that trade and immigration policy change seen as potential risks on inflation. And they're having a careful approach, that's in quotes, to cuts. We got the decision. The minutes always give us a little more color as to what the conversation was behind the walled Federal Reserve. Let's talk about large caps. You say that that's the place to be. I mean, should that be a bigger weight in our portfolios right now as we kind of weed through some changes we're seeing?
Yeah, I think typically for most viewers, large cap should be your largest allocation, simply because it's predictable. It's a lot easier to model some of those names. And also, if we do have any hiccups, internationally, I think there's a large amount of business basically being done by some of these multinationals. Now, with that being said, I think there is a huge concentration in some of those kind of Mag 7-ish names that I think people should look to diversify a little bit lower in the large cap space, not have to be just mega cap. But I think that's the place that's going to deliver consistent earnings, and you have the ability, I think, with better management to be able to steer any hiccups that we do have.
Yeah, well, you're still on that cybersecurity train with Palo Alto Networks. Is that still something that you're recommending right now?
Yeah, I think last time I was on about 2 months ago, CrowdStrike, we loved it. CrowdStrike's rallied. Palo Alto just hasn't done much. It's up about, say, 10%, I think, in the last 12 months. I pretty much like all the stocks in the space because they all fit a different niche. This happens to be the most attractive from a price standpoint. It hasn't had the big rally that a CrowdStrike has, or a Fortinet has for that matter. But we do like that space. We think it continues to do well. As AI becomes more and more predominant, you're going to have smarter computers trying to steal your stuff. Whether at the corporate or personal level, cybersecurity is really a safe play for us.
And those data centers are going to need energy. They're going to need power. You like Ensign Energy Services. You also like GV Vernova. Is that because of the data center build out that we're looking at?
Well, Ensign's actually a more of a retirement play. Ensign's actually a smaller cap name, mid cap name. They are in the retirement and skilled nursing business.
Okay.
Yeah. Aging of America for us is a big theme. We love that. We think as people get older, they live longer. They're going to need these facilities, skilled rehab. But yes, GE Vernova is another name. It's 17% off of its high. They got a good gas turbine business, but they also have exposure to nuclear. And I think nuclear is going to be one of the things that seems to get across the aisle bipartisan support. And you want to have a play there, but it's a lot less risky than a pure play nuclear name because they've got these other businesses to support it.
Right. But again, we're going to need all the energy for the build out of these centers across the nation. And that's been something that's definitely been on the minds of investors. Michael, thank you so much for being here. We appreciate it.
My pleasure.
All right. Well, here's a